Welcome to the Standard and Rich podcast, where finance meets fun. Join your hosts Danny Gallo and Jonathan Elkoubi as they navigate the complex world of finance with a touch of humor.
Welcome back, everybody, to the Standard and Rich podcast. Today, you are joined by your hosts, Jonathan Elkoubi and Danny Gallo. Let's start this thing off with our market news segment. Danny, let's start it off.
Perfect. So last week we had a few news coming down the wire. So you had Jerome Powell that spoke at several key events. So he did reiterate the Fed's goal to bring down the inflation to the 2% target. He did say that inflation has moderated from its peak. Still too high, but the Fed remains committed to bringing it down to the target level. He also said that the labor market continues to show strength with low employment rates and solid job gains. But Powell did start pointing out that there is sign of cooling in that type of in the labor market conditions. He also said that the Fed remains independent from all the political pressure that's coming out with the elections. So that pretty much sums it up from Powell this week. He also did give a comment today about if he didn't cut rates by the time it hit 2%, that they would be too late at cutting rates. So there's a good possibility that they start cutting down rates soon. I think the latest numbers expect a 90% chance that we will be cutting rates by 25 basis points by September. So that looks pretty interesting. There was also, obviously, Amazon. Jeff Bezos has been continuously selling at that 200 level. So every time it hits the 200 level, he's been selling some shares. He filed some more today. So that keeps being interesting. There's also Tesla that pushed back their robo-taxi for October instead of August 8th. Elon did comment about that, so it was a true story. He did say that there was a small design flaw that he didn't like at the front of the car, so they will be fixing that, and at the same time he said it'll help them add some extra things that they could show off during the event. There was also a few bank earnings that just came out at the end of the last week and this morning. So there was JP Morgan Chase that had an earnings per share of 6.12, which beat the consensus estimate of 4.19. It also had a revenue of 50.8 billion, exceeding the expected 42.23 billion that was expected by analysts. Also, I saw an email today on X that they were saying to their customers to expect to start paying a bank charge. So I'm not sure if that's going to help them or not. They are huge. They are the biggest bank in the U.S. So I don't know if it's going to affect them or not, because they're pretty much the safest thing that's out there right now. There's Wells Fargo also that came out, so they reported a 1.33 EPS above the estimate of 1.29. They also had a revenue of 20.7 billion, surpassing the expected of 20.29 billion. Citibank also came out, I think that was this morning, with an earnings per share at 1.33, which was just slightly below the expectations. and they had a revenue of 19.44 billion, with strong trading revenues, but challenges in the consumer banking. So it kicks out the earnings seasons pretty well to see that the banks are still hitting everything that the U.S. banks have been doing great the past few quarters, especially the big banks. I'm not talking about the small banks and the regionals. They should be coming out. If I'm not mistaken, the regionals are starting tomorrow to reveal their earnings. So that'll be nice to see if they're also as healthy as these big banks. And that's about it for what I saw for the market news of last week.
So that means it's our time to move on to our new segment. We just started this segment. Last episode, it's our portfolio critique slash analysis segment. So this is basically where we take someone's portfolio on Blossom, which is a social media investing app where you have your portfolio displayed for other people to see. And we are going to critique someone's portfolio today. So that person is Rena. This is someone, Danny, you've been interacting with this person on Blossom.
Yeah, honestly, she's super sweet. She posts a lot on Blossom too. Always like a happy-go-lucky person. So I thought that was going to be a nice contrast with the last episode we had last week.
So it says over here she's a shareholder. So that means she owns some of the Blossom social shares. And let's jump over to her portfolio analysis. So right on the top, we see her biggest position is NVIDIA. Danny, what do you think about this holding NVIDIA at 16.3% of her portfolio, and she's up 20% on it?
Look, it's hard to bet against Nvidia. I think I was too late to the party, and it's hard to get in at this point. You know what I mean? After such a big run up, even though their numbers and their sales like support this type of run up, um, I could try to go more into details about their like percentage growth and all that. I know it's been immense, and they're priced to perfection every quarter, and they beat that expectation, and they always rise their guidance. So that's one thing that Wall Street loves. So it's hard to bet against Nvidia. They have amazing profit margins. They're the leader in their industry. Until somebody could start chipping into their market share, it's gonna be hard, especially for like the top tech companies are saying that they're gonna increase capex by an average of 40% by next year into this AI. So you have I think it's Blackwell, their next chip that's coming out, and they're expecting that's going to be huge. So you can't go wrong with Nvidia. It's pretty big. Personally, I'd probably go a little bit lower in my uh,
Portfolio allocation.
like my allocation. Yeah, exactly. My allocation to Nvidia just to downside the risk and have the upside potential. That would be the only thing I would do. Except for that, I don't really mind Nvidia, to be honest.
And her second biggest holding is Microsoft Corporation at 13.8% of her portfolio. She's up 6% on this. What do you think about Microsoft? I mean, I haven't looked too much into it. I was never really interested in Microsoft. I don't know. I never really looked at it. What about you?
Well, look, Microsoft's another one that, and well, they started, I would say, that big AI trend by investing a lot of money into open AI.
Yeah.
Um, Now, is it going to cause, right now, they're just concerned that maybe the FTC is going to get into it. Um, I don't think that they like the fact that they're like so close to open AI and all that, and um, I didn't read too much about it, but I know the FTC is looking into it, and they didn't like they were saying they were going to get off the board from their observing seat, so that's not going to happen anymore. They're just going to be on but the FTC came out and said that it doesn't really matter if they're on the board or not. It's not going to stop their probe if there is to be a probe. Look, they have some upside too.
They have great products.
What did I hear about?
Like
Yeah, great products.
like
They look
they switched all their products from what it used to be like a one-time purchase to now it's like recurring, like SaaS,
recurring. Yeah,
like software as a service. So they're
yeah.
recurring everything. It's increasing their profitability, making it way better for them and for the customer because they get updates all the time and they don't have to keep buying the new version. And they have
Yeah, I,
yeah. What were you gonna say?
the Xbox Pass as well. I think they just increased the prices on that.
Yeah.
Look, they could increase their prices on Microsoft Office and by $5, $10. It's not going to affect anything. Especially that now they're just incorporating AI. They're going to incorporate AI to it too, so it could help you do your sheets and all that. So that'll help a lot. It'll reduce time consumption. So I'm pretty sure they already have a model that you could buy that's more expensive and you could have the help of AI. So I'm pretty sure a lot of people are going to get into it.
Yeah, and then we'll move on to our next
Maybe.
position. Oh, you want to say something?
No, that's it. Thank you.
Yeah, so we'll go into the next position. ZSP. I think you own this one. It's the S&P 500 index. Good diversification for a portfolio. I think it's an all-around good hold because you can hedge yourself to the market and you have a benchmark. So you know that you're less volatile and you're going to get a consistent return like the market. So it's a good little benchmark to have. It's 13% of our portfolio. Let's move on to our next position is Visa. We actually talked about this in one of the recent episodes. Was my stock pick of the week. So I obviously like this company. It's at 12.2% of our portfolio. It's one of the most profitable companies, and when I say profitable, I mean profit margin. I think Nvidia is almost. I think they're more profitable than Visa. I think they're head to head in profitability and profit margin, but Visa is like the most profitable company in the stock market. Like they have so low costs, um, and just the cost to maintain their transactions is so little that it just boosts their profit by so much. So our next position, Amazon, 8.9%. You own this one too, Danny. Um, all around, it's a growing company. The actual Amazon delivery business that you buy stuff isn't even profitable yet, so that's not even accounted into their earnings. Most of all their earnings is AWS right now, so a lot of potential for Amazon. They could raise prices, and once they reach full scale and cost efficiency, they will be very, very profitable and a lot more profitable than they are now. So the growth potential is very large. Do you have anything to say about Amazon since it's one of your holdings, Danny?
Look, I'm very bullish on Amazon. If it's not my first and my top holding, it's probably my second top holding. So many verticals, so many verticals. They could really cut down costs by integrating. They've been integrating robots ex more and more every year. I think they will continue doing that. They'll get better at it too. They're doing extra verticals, so they're getting into health. They're making medicine less expensive in the US. They're getting into, well, they have AWS obviously, but they're, like you said, that part of the business is not profitable yet, the deliveries and all that, but that should be profitable by the end of the year. Um, they're just getting into so many different avenues. Even Prime membership is it's cheap for everything that they offer you. So they could increase that price for a few dollars a month extra, and that'll give them more revenue, more profit. They could, well, now with the ad business for Amazon, that's another avenue too. So if you're going on Amazon Prime Video, you could watch movies with ads, or you could pay $2 more and get no ads. So it's honestly a win-win for them if you buy it or not. All in all, I just think it's a great business. I'm holding it long term because I just think they're just going to get better and better. The revenue is just insane. Well, now they have Prime Day the next 2 days, and what was the number I told you before? I think they're expecting
13
15
billion
billion in
Prime Day.
revenue. 13 billion.
Yeah, you said.
13 billion 2 days in revenue. So that's
Yeah.
going to be pretty crazy.
Yep. And so let's go on to her next stock. She has at 8% of her portfolio. She has Google, which is one of my holdings actually. So I could talk a lot about this. They have Waymo, which is their self-driving car, and it's already fully rolled out in a lot of states. It's very cheap. I have a friend who was in Arizona. He was going to school there, and he was telling me that it's way cheaper than Uber, and it was like to $15 max per drive. Like a $5 drive. That's how much it costs for the self-driving. And their search business, they have crazy search business. Everybody uses Google. They have their suite of Google Drive, Google Sheets, Google Docs, all that type of stuff. They give that for free. They could easily, well, they charge for Google Space, like a cloud space, which is a really good upsell. I think it's like a couple bucks a month, but they could easily raise the price for that. They have the YouTube, which is growing very fast every single year. And they just keep starting new and more businesses. They have their phone, I think the Google Pixel. It's like one of the top competitors in the phone space now. I think it's third place, right? Behind Samsung. But it's
I would have
catching up,
to
it's
dig
gaining
into
market
it.
share. Yeah, well, sorry.
I would have to dig into it. I'm not too sure
Yeah,
about
but
the
yeah,
numbers.
I think it's catching up. It's gaining market share. My friend has one. He showed me. It looks pretty cool. Like their features are a lot better than Apple. I mean, I personally wouldn't switch just because of the ecosystem and how like I'm like locked into the Apple ecosystem and how everything's like already there and it's so easy to switch from a new iPhone to an old one. But I think like the Google features are cool. The stats for their phone is better, but it's very hard to compete with Apple. But yeah, all around Google is a very attractive company to buy right now. Let's go to our next position, Costco at 7.7%. I really love Costco, but I just think it's so expensive for me to buy. Personally, it's a I think it's let me go check the P right now before I say anything, but I think it's a rich valuation. Costco 52p, yeah, very rich valuation, but it's always going to grow. It's always going to be there. It's going to be a consistent grower at a fast growth rate. I think it's at like 11 to 12% per year. So pretty good. And I know this about the economics of Costco is that they get more and more profitable the more they stay in a community. So like for example, I was reading this, when a Costco first builds in a new community, it takes 5 to 10 years for it to actually reach profitability. But then when it actually breaks even and starts reaching profitability, it is very, very profitable for Costco. And the numbers are very high. So basically they're just building stores and the more and more a community kind of like invests in Costco, so like you get the membership and that means they'll use it more, so it increases their profitability more and more, so it'll just increase over time. Like it's just like a thing where you just increase over time without them having to spend more money, and they do this by just keeping their costs low. It's way lower than Walmart, all their competitors. No one can compete with them on price. So they have a price advantage. That's a competitive advantage that no one can touch them on. And they just decide to lose money on a lot of things, and they could take those losses because they're making so much money on everything like their memberships. It can cover their losses, and the memberships make up for all their profit. So that's a great hold, great stock pick by her. Palo Alto
I
Networks
have
at
two
7.
things to say as well.
Yeah, you can go ahead.
So Costco did bring up their prices, so that's one thing that's pretty good for them. So they could increase the price of the membership, and it doesn't. Members will stay with Costco because at the end of the day, if they get a Costco credit card, they could get that money back easily. So they brought up uh, business and business add-on members by $5, so it went from 60 to 65, and their executive memberships saw a rise from 120 to 130 dollars annually. There's 52 million people with memberships, and half of those have the executive membership one. So that's right there. That's 26 million times 10. So 260 million that they'll make just off that. Uh, and they could just keep doing that every few years, just adding $5, $10, and people will still shop at Costco nevertheless. And for Google, actually, there was some news this morning that they're in advanced talks to acquire a cybersecurity startup Wiz for 23 billion. And what's funny is earlier this year, Wiz raised $1 billion at a $12 billion evaluation. So they're doing a 100% premium on it. So we will see if that passes or not.
And you want to talk about their next, the next position she has at 7.4% of her portfolio is Palo Alto Networks. I'm actually not too familiar with this one, but I believe you are. So what is Palo Alto Networks?
So it's funny that I just talked about cybersecurity. So Palo Alto is in cybersecurity, and it has strategic investments in AI technology. So if I just go through their financial performance, so they reported a revenue increase of 90% year over year, reaching $2 billion. They went from 1.05 dollar EPS to $1.46 in a year, uh, from quarter year over year, but that quarter to the other quarter, right? So Q2 2023 to Q2 2024. So that's pretty impressive. They've been facing a bit of volatility just due to their downside revenue forecast. So that's been that's what's been affecting a lot of stocks. If you don't upgrade your forecast, if you lower your forecast, you're getting destroyed. If you upgrade your forecast, you're gaining a lot of love. If you don't do anything and keep in line, then it's just a normal jump up or down. So it's heavily invested in AI to enhance its cybersecurity features. What I like about this company too is obviously Nancy Pelosi has calls for January 2025. So I guess this girl is that Pelosi is very bullish, and we all know that she's the queen of trading. So they plan to generate also 15 billion annually from next gen security solutions by 2030. The long-term vision is supported by their focus on integrating AI and optimizing their product portfolio to meet evolving cybersecurity challenges. Overall, analysts have a positive outlook on the company's growth, with several of them raising their price targets and maintaining strong buy ratings. Look, cybersecurity is very important, I think. If I'm not mistaken, they have. I just want to check their market share. I had it just here. Give me 2 seconds. So their market share right now is 24% as of 2024. In 2015, it was 7%. So you're seeing really nice growth, and they're taking a lot of market share. Having 24% of market share is pretty amazing. So if they're doing 15 billion in revenue by 2030, that would mean they are doing about 100% more than they're doing. They're doubling what they're doing now. So it's very, very good. I haven't looked at their PE and all that, but it's nice to have in your portfolio. I've been thinking about adding Palo Alto or wow, it's CrowdStrike to my portfolio just to add some cybersecurity names to my portfolio just to be in that, because I I don't think, but there's a lot of cybersecurity attacks that are coming from Russia, China, and other places that are affecting businesses here. So I think people are going to spend a little bit more money on cybersecurity to make sure that on that end, they're covered. Look, what's a big company that just got hacked actually in the US? I think it was AT&T. All their text message and calls all got hacked. Yeah, so the company reportedly learned of the hack in April. The hack was massive, involving 109 million customers. The data include phone calls and text message of nearly all AT&T customers from May 1st, 2022 to October 31st, 2022, as well as some data from January 2nd, 2023. What is crazy is that we're just learning about that now. That's 2 years ago.
Well,
That's 2 years ago, and we're learning about that
cybersecurity is
now. That's
becoming more and more important in our day-to-day lives.
yeah. Hey, AT&T reportedly gave $370,000 to a hacker to delete its stolen customer data.
You think he actually deleted it?
That just came up. I don't know. The second you
So,
start giving money to people, man, they'll just use it to bribe you for more money. I don't
yeah,
think it was a good decision. It's like they say,
so
never negotiate with a terrorist, right?
yeah. So let's go on to our second last position, Novo Nordisk at 6.7% of our portfolio. This is actually the pharmaceutical company that owns Ozempic. It's a weight loss pill that has gained a lot of popularity recently. Danny, I think you know more about this. You want to talk about it?
So, yeah, so they really put the weight loss drug on the map with Ozempic, like you just said. Um, Let me see what other drugs that they have that's pretty popular.
They're up
Novo
75% in
Nordisk.
the last year, and they're at a
Yeah,
50.
anybody. Look, I think Pfizer just came out with their own weight loss drug, and I'm pretty sure that helped the stock as well. Anybody that started saying weight loss drug into their company has popped off.
Yeah, so that's a
Wow,
good
look, they went
little
pretty.
pharmaceutical diversification she made.
Yeah, I like
Uh,
that. Well, 6.7% is still a high allocation, but at the same time, like it, if it starts running, it's pretty amazing.
yeah, so her
And
last
then, yeah,
smallest position is actually one you own. I think you just recently bought this. Taiwan Semiconductors at 5.1% of our portfolio. You're very bullish on this with the AI chips. I'm gonna let you talk about it because you could talk about this for all day.
yeah, TSM is probably the one I post the most about Blossom. I just posted today that Needham has raised their price target to 210 from 160. So they expect to bring down their capex and raise quadruple their free cash flow from 2023 to 2025, which could mean more upside for dividend, cashback, and all that. Um, so look, they have one fun fact is that TSM's revenue is 25% comes from Apple. So right now you're getting a lot of news that they're selling well, their new phones are selling well. Even in India, they just came out with some pretty bullish news. So, so anything that Apple does, it's like if you don't want to own the Apples, the Nvidias, the Qualcomms, the AMDs, if you don't want to hold them outright, if you hold TSM, it's technically holding all of them. So, AMD is 10% of their revenue, Nvidia is 5 to 10%, Qualcomm and MediaTek are 5%, and Apple, like I just mentioned, is 25%. So if you're getting a piece of all these other companies, and all these other companies right now are growing. So if these companies are growing, TSM will be getting more orders. And yeah, it's pretty bullish. They want to bring a factory to the US as well. So they're getting a lot of money from the US government to come in. I've been following it since 140. It's now 184, and I still think it's really undervalued. So I've been adding on most of the dips that have been coming in. Anytime it goes down, like under that 183, right now it's 185. Anytime it touches 183 and lower, I buy more. I would love it to go back under the 170s, but their earnings call is going to be on Thursday, and I think the targets that the analysts put are too small, so I think they're going to blow past those estimates. Especially if you compare their revenue with all the data that already came out about their revenue, they're already beat on the revenue. So it's just going to matter on it's just going to be their EPS that's going to matter. And I don't think they're going to have a problem with that, especially that they're already booked fully 2025, so they already have all their orders. And no, I'm pretty sure, unless something happens with China, this is a great company. The only downside, the only reason why it's not running as fast as all those like Chinese military planes or boats coming in, that always affects a bit stock price when that type of news comes out.
But are they trying to diversify away from Taiwan so that they can stay away from the war
Well, they
risk?
want to open a place. Yeah, exactly. So they want to invest a little bit more. I think they said in Europe too, but I know they're building in the US. The only
Yeah.
thing is the material itself is in Taiwan. So the metals and all that they need to the minerals and metals that they need are in the ground in Taiwan. So they would still have to try to ship that material to the US.
Okay, so I think overall it's a really good portfolio. We have a lot of commonalities with her. We share a lot of stocks in common, and she has 10 stocks in her portfolio. It's fairly diversified. She has the S&P 500. It's very tech heavy, like around 60% in tech. But I think that 10 positions is the perfect amount to have because you're not too diversified, but you also get all the benefits of diversification without getting the downside of diversification. Like you get the benefits of diversification is lower risk and lower downside. Like you're not gonna lose all your money because of one company going bankrupt. You know what I mean? But
She,
she still has enough position and she still has enough like concentration to have capture a lot of upside. So if her stock doubles, it's going to be a big portion of her portfolio, and it's going to give her a lot of upside. So I think
yeah.
10
Well,
position is
look,
the
she has
perfect.
a bunch of blue chips that are growing fast too. Look, she has Nvidia that's been growing fast. You have Microsoft that's amazing. Then you have Amazon that's amazing. Costco's been on a tear this year. Palo Alto's been on a tear. She really has those runners in TSM. Like I said, TSM and Amazon, for me, you just can't go wrong right now.
Yeah, I think that's it for that segment. Let's move on. This is a long episode already. Let's move on to the stock pick of the week segment.
Guys, don't forget to click the links below to sign up on Wealthsimple and Questrade to start investing. You will get a free $25 and $50 sign up bonus with any deposit amount over $1. And also, don't forget to like and subscribe our podcast.
So let's summarize what happened last week. Who won? I heard you're crushing me. Let's. What do you think's happening? What are the results?
So I think the official score now is going to be 4-2 for me. So if we go back 1 month, I had TSMC. So it's funny that we've been talking about a lot of TSM today. TSM is up 7.38% in the past month, and you had TD, which is up 5.55% in the past month. Which
Oh, we both did
honestly,
good.
Jonathan, it's pretty good. We both did good. It's very good growth. We can't complain about it, especially that we're talking about short-term investing here. So that type of growth is pretty nice. We finished positive on a lot of these. Honestly, we're doing pretty good. I have to give us a bit of credit here. So I'll let you go as the winner. I will let you go first on the stock you want to pick for the battle this week.
So the stock, by the way, I'm the loser, but the stock I want to pick this week is Lululemon. I've been looking at this thing recently. It dropped a lot, so that's what caught my eye. It's like 50% from its high. And let me just walk you through a lot of the numbers. I ran it through a DCF, and let me just give you some of the history. So sales growth for the last 10 years is 20%. That's insane. Really good sales growth. EPS growth is 25% and free cash flow growth is 27%. So insane growth numbers. I don't know if these are sustainable for a apparel company, but it's definitely going to be in that range. I don't think it's going to be that high. But if I look at the 5-year numbers, if I look at the 5-year numbers compared to the 9-year numbers, the 5-year numbers are higher. So they're definitely growing faster and faster. But I definitely don't think that's sustainable. I think they're going to grow at a good rate, maybe around 15%. And I think the stock price reflects their actual earnings growth. So if their earnings do well, the stock will do well. And they have a strong brand. They have very high quality clothing. I'm actually wearing their shorts right now. Feels super light, like I'm wearing nothing. It's perfect for the summertime. And it's very good for exercise and athletic wear. They are a bit pricey, but it does come with a lifetime warranty, so that is good. At least you know your stuff's not going to get damaged. You could just get a new one. But the quality is very high. And I think that their brand name is starting to get more and more powerful as the years pass. And I think right now at a 22 PE for a growth rate of 20%, I think it's a steal. I think Lululemon is a steal, and I will be adding it to my portfolio very soon. As soon as the market opens tomorrow morning, I will add Lululemon to my portfolio. I think that's enough for Lululemon. What is your stock of the week, Danny?
I thought Tesla was reporting tomorrow, but it's reporting next week. So, talking about Tesla, we've been trying to go with some names that are a bit less popular, except for some weeks. And today I'm going to go with a name that's pretty popular and pretty bullish on it too. You're pretty bullish on it too. So I'm going to go with Tesla. You know all the reasons why I'm pretty bullish on Tesla. Cybertruck just came out. There's news that just came out today about the Cybertruck as well, that it was the best-selling EV truck in the market right now. So that's pretty nice. So it's beating the F-150 Lightning from Ford. Probably the Rivians. Rivian doesn't have a truck. I think they only sell SUVs. Anyways, so yeah, so that's pretty nice. Their energy the segment of their business is growing very fast. Like Elon said, it's probably going to pass auto revenues. You have FSD that's coming out of the pipeline. You have Robotaxi unveil in a few months. There's a lot of positive headlines about Tesla right now, so I think they're at a good place. A lot of people know my thesis on Tesla, so I'm just gonna keep it at that and tell you that Tesla is my pick.
Tesla is also the biggest position in my portfolio. We both own this stock, but it is the biggest. I think it's like 18% or 19% of my portfolio. The biggest position of our portfolio. So yeah, I'm very bullish on this company too.
Disclosure.
So I hope you win this week's stock battle, because that'll mean a lot for me, and it'll mean my portfolio will go up. So we are both happy if you win. And I think that's a good place to end it on. It's been a long episode. I think it's the longest episode we've done so far. So everyone, please don't forget, like, subscribe, comment, do everything you can to help us out. We're trying to grow this podcast so more people could see us. So do everything you can to help us out. And take care.
Before we go, a quick reminder. While we love discussing financial topics, we are not financial advisors. The information provided in this podcast is for educational and entertainment purposes only. Please consult with a qualified professional before making any financial decisions. Thanks for listening, and see you next time.